Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. It's tough today to be a real estate investor. There's less to choose from and interest rates are high. But what if you could secure below market financing in an above average market? Not only is that possible, but you'll hear about it today. And we've got a great guest on the Real Estate Guys radio program. In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms, and joining me as usual, our financial strategist and co-host, Russell Gray.
Hey, Robert.
You know, last week on the show, we talked about the elephant in the room for real estate investors, the fact that interest rates are high. Not only are they high comparative to the last 5 years or 10 years, but they shot up quickly, and lots of real estate investors have sticker shock. We talked last week that homeowners maybe have a little more sticker shock because investors will look at the numbers, and if it makes sense to pay more and get the return, they'll pay more. But one of the many alternative sources we talked about last week was finding a developer, a builder who has it in their budget to be able to subsidize the loan. Now, if you don't have your mind around all that, it's okay. We're going to spend some time talking about that today. So financing is one piece. It's a big piece. We spent all show last week talking about it. Today, we're not going to spend all the time talking about it because financing isn't enough. You got to have a great market. You got to have an awesome property. You have to have excellent property management. So there's a lot of pieces to the puzzle that need to come together for an investment to work these days.
Yeah, and I think that when you think about the different factors that either give you a reason to be hopeful or a reason to be concerned, you have to separate them into macro and micro, or macro and regional. Obviously, we talk about interest rates. Interest rates are kind of the same everywhere, and yet amazingly, they're negotiable, as we've discussed, or they're at least manipulatable if you've got the right situation. So putting your capital stack together for an individual purchase, using some of these creative strategies can help you improve your cash flow in spite of interest rates or things like that. But then the other part of it is the micro. You can't look at the national averages about what's going on with rents and rent growth and rent trends or even prices, because real estate is so very local. So if you can take something that is working against you, maybe higher interest rates, and use a strategy to bring those into line a little bit better, and then pair that with a great market and, to your earlier point, Robert, great management, because there's more than just what it says, this is what the rent is supposed to be. Well, that's interesting, but what is it really? How often does it turn over? What kind of a demographic is in there? How are they treating the property? And of course, then the other part of it you've got is a condition of the property, right? If you've got a property with a lot of deferred maintenance and bodies buried in there, if you will, you're going to have to deal with all of that. Whereas you get something that's in better condition, been properly rehabbed, or better yet, brand new. Well, you don't have some of those variables, especially at that beginning phase when it's so fragile. You've gotten in and the rents are maybe, they haven't had time to escalate a little bit. So if you get the right macro conditions and then you get the right micro conditions, which is a regional market, and then pair it to what I call the nano conditions, the actual property stack, the person you put in the property, the person managing that property, even in today's market, I think you can find a lot of opportunity, and that's a reason to be hopeful.
Well, and remember that real estate is a long-term investment. Sure, you can buy a property and fix it up and sell it 6 months later and make a profit. I wouldn't call that real estate investing. I would call that flipping, which is a great job perhaps, but it isn't the same as investing. What investors do, right? Chapter 1 of Rich Dad, Poor Dad, the rich don't work for money. The rich let their money work for them. And when you buy an asset, you are looking at cash flow, certainly, but also things like tax benefits, amortization, but also long-term appreciation. So people talk about, buying treasuries today. Okay, if I buy a treasury today, I can make 5 or 5.5%. And I know that's fairly solid. There are no guarantees, but, it's kind of at the center of low risk. But at the same time, there is no upside in that at all. If I were to find a property that could produce 5 or 5.5%, but I know that over the next 5, 10, 20, 30 years, not only will the rents likely increase, but there's an excellent chance that the value of the property will increase. And over that time, guess what? My tenant paid off my mortgage. So we're big fans of single-family houses. And I think as you talked about, Russ, there's lots of things to consider. Another is tax, right? There's some tax benefits of investing in real estate that you don't have in other assets. But we often say, don't let the tax tail wag the investment dog. And I think the same is true for financing. Don't let the financing tail wag the investment dog. If we're at a seminar and we say, how many of you think interest rates are too high? And a bunch of hands go up. And you say, well, who would never pay 10%? And there's hands that go up. Well, who would never pay 15%? And there's even more hands that go up. And the point we make is, well, what if you make 22%? If you're making 22%, would you pay 15%? Well, you'd be an idiot not to. Yeah, that's arbitrage. That's the good part. Whatever it costs you, if you can make more than that, you have less competition as those hands go up in the air. So you have to train yourself as an investor not to just think, well, I've been paying 4% or 5% or 3%, and now it's 7 or 8. So I'm going to sit out. Well, then you're going to miss all the rest of the benefits. So hopefully you heard last week's show. If you didn't, go back and check that out. And then one of the big questions people have is, okay, well, great. Where can I find some of that stuff? And that's when market selection becomes important. And we talk about often on the show that there are a couple of quick shortcuts. The first in market selection is some states in the United States are more tenant-friendly, and some states are more landlord-friendly. If you just separated that into two piles and said, I'm going to invest in the landlord-friendly states, not only did you just up your potential return and lessen your headache, but you just eliminated a bunch of stuff not to bother looking at. That's the first. And the second is there are places in the United States every month that more people are moving into than out of. So the net in-migration is positive. And there's places that the opposite is true. More people are leaving. So with that little overlay, let's look at the markets where people are going and that are landlord-friendly. All of a sudden, you're not looking at 50 states. You're not looking at 256 MSAs. You've brought the target of opportunity a lot closer in. And so today, we're going to talk specifically about some markets that work and also some financing that makes sense. When we come back, you'll meet a first-time guest right here on the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
All aboard! Registration is open for the Real Estate Guys 22nd Annual Investor Summit. Imagine spending more than a week with like-minded investors, world-class educators, and real-world professionals. Returning in 2024 is the editor of the Gold newsletter, Brian London, real estate developer Beth Clifford, and the rebel capitalist George Gammon. Back with us in 2024, sales legend and best-selling author Tom Hopkins. And joining us live and in person for his 12th Investor Summit, Ken McElroy. Plus 2 brand new faculty members we can't even mention yet, and a lot more. It all begins June 13th in Fort Lauderdale, Florida. Visit investorsummitatc.com to get all the details and reserve your spot. This transformational week is like no conference you've ever attended. Go to investorsummitatc.com and make plans to spend a week with the Real Estate Guys, Ken McElroy, Tom Hopkins, and an all-star faculty on the 22nd Annual Investor Summit at Sea.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication Seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, guys. My name is George Gammon from the Rebel Capitalist Show, and you are listening to the Real Estate Guys, my favorite podcast when it comes to macroeconomics and real estate investing.
Welcome back to the Real Estate Guys radio program, now in our 27th year of broadcast. We thought at first it would be hard to think of new topics, but it's amazing what the market does for us. And today we're talking about finding a better than average interest rate in a better than average market. How do you find a great market that makes sense as a real estate investor, but also avoid the sticker shock of where interest rates are today? We'd like to introduce you to a gentleman that you've not met before, but you're about to, from Southern Impression Homes. Let's say hi to Jim Shields. Hi, Jim.
Hey, Robert. Good to be here. Thank you.
Hey, it's good to have you here. You've been kind of behind the scenes and working with our friends at Southern Impression Homes for nearly a decade here, so you're not really a stranger to this space or what we do, and certainly not what you guys do. But I'm excited to hear from you, first of all, on the financing piece. So just to back up, you guys build houses, and primarily your purchasers are investors. So that separates you from a lot of builders. I know that sometimes you sell to owner occupants and so forth, but you're a builder, which means you're cognizant of what it costs to finance the construction and then what the end user is going to have to pay in financing. Tell us what that world looks like today.
Yeah, I know that people on the show have heard from my partner, Chris, before, and Chris and I brainstorm behind the scenes a lot on what do we need to do. And as you know, we went from the old properties to just new construction, because for us, the fundamentals made sense of what you and Russ were talking about before, but we're always troubleshooting. When you're given a full service on troubleshooting, is there management? What's the insurance like? And really the big elephant in the room, like you guys were talking about, is what's going on with interest rates and financing. And so, as I believe Russ said before, you can work your own interest rates if you know how to do it. And what we found is we're in a pretty lucky situation right now. I mean, we've created our own luck, but we've built up a successful company with a good balance sheet, which puts us in the position to be able to pre-buy money. And money's not cheap, but if you can buy it in good amounts, you can actually outperform what's offered in the market. So as you know, and we've done a lot of them with you guys, duplexes and quads are great building blocks for a real estate portfolio. Still in that residential realm, but extra rents. But if you go into a mortgage company today, Robert, you're going to probably be quoted about 8.5%. 8.5%, to start off, which again, if the numbers work, the numbers work. But Chris and I are always saying, how do we get the numbers to work better? Because we want them on that first leg of the journey to step off the shores with cash flow, with better momentum. And we said on these properties, if we can get them a better rate, we can do that. So where most people are getting quoted 8.5, right now with us paying for everything, you can walk into a mortgage at 5.75 through our in-house financing.
Wow.
And we're figuring if we're able to get you down almost 3 points below the norm, Robert, along with good construction, management in place, in a place like Florida that, man, are we landlord friendly? That's one of the reasons I left California many years ago to come here. We can get you off on a better stepping stone. And the financing, it really is a core part of that.
Well, it is the big thing on everybody's mind. And I know you guys work with a lot of first-time investors, and it's a great product if someone buys a single-family house, a duplex, a quad, and they can get that financed at a rate they can live with for a while as the rents mature, and so do the properties, and lots of reasons to buy new. You don't have that deferred maintenance, builder's home warranty, all those things. But the interest rate part is fascinating to think about. And I think the average person doesn't think about buying chunks of money. But that's really what you do when you commit to that financing. And it's like anything. The reason people go to the warehouse store is because they get a better price when they buy in bulk.
Exactly.
And money is no different. If I have a big pile of money to lend and I have to originate a whole bunch of small loans and do all the paperwork and all the vetting and all that stuff, that's a certain amount of work that has to get paid for. If someone somebody came along and said, I'll just take a big chunk, well, we're still going to have that particular set of due diligence and paperwork, but a lot less per dollar, if you will. Well, it makes sense. So it's hard for folks to understand that not everyone pays the same price for money. So that's a good paradigm to break. But the second thing is, last week on the show, we talked about this idea of buying down the rate. And that's just math. And this has been a tool for years and years and years where you can decide as a borrower, hey, if I want to have a lower interest rate over time, and usually that's because I expect to be in the property a long time, then I can pay a few more points today and get the rate down. And so this isn't a new technique, but I think what's new is, one, you guys buy it in bulk, and two, as the builder, you're paying those points, that buy down, which benefits the investor.
Yes. So people a lot of time say, what is the catch? And we say, our job, as you said, we're very different, Robert. We're not we do sell a little bit to retail buyers just to keep the markets tested, but we are investors and we build for investors. That's what Chris and I decided a long time ago. And when we focus on that, we know it's just such an important part of the equation that we have to learn how to make the numbers work. And so by being able to do this money, we're put in a position where we are taking the Walmart approach right now, Robert. We have a lot of land, over 5,000 lots we're building out in Florida. And with our parent company, we've decided to take a lower profit margin to continue our volume. And that's how we continue to work with what we do.
Well, let's talk about that, because this is a critical distinction. You know, there's a lot of folks who say, yeah, well, okay, if they're going to buy down the rate, I get that, but they're going to have to raise the price of the house. Well, that seems logical, except that's not what you guys have done. No. Because one, that can create problems with appraisal and comps and all that stuff. But two, based on your volume, you literally can decide to be that warehouse provider and make a little less per house, but make it up in the volume.
Exactly. And that's always been our model, but even more so right now. As you guys know, we've kept a really good volume through this entire year, and people are going, well, how are they doing that? Well, we're in Florida. We are doing new construction, and that does help. But putting this interest rate in place, Chris and I are looking very long term with this business. We've been doing this 10 years. We're looking out 10, 20 years now. And we know a less profit margin now to get people off on the right foot. Retail buyers might step around every 10 years or so. You know, our investor buyers, they're stepping around every 6 months, every 12 months, every 2 years, and continually buying with us. And we know if we have a lower profit margin now, that's okay, because we are looking volume and long term with the portfolios we're building.
Well, another angle that you need to think about when you're in the construction business for folks to contemplate is something that a lot of builders have had to deal with in the last couple of years, and that is constraints in supply chain, cost to ship, all those things. And we saw several components within construction go up 2x, 3x, 4x. Well, that has to be added to the price of the house. Where are you today with supply chain and the cost of the goods it takes to assemble these properties?
Yeah, that's a great question. And man, was that a tough thing for builders all over the U.S. I mean, we had not seen an inflationary effect like that in, several decades, let alone within those 2 years compression. And we've worked through our backlogs, and we had to have, as you guys know, some material price increases, but I'm happy to announce those are long gone. In fact, in the position we're in now, Robert, where a lot of the risks come in is if someone contracts a home and the home's not going to be built for, let's say, another year. Right now, with the place that Chris and I have built the company up to, we're on what's called a continual build, meaning some builders have to get a contract to start construction. That's what their bank requires. Since we no longer have any bank debt and our parent company given us the full green light, we're able to build all these properties and release them to real estate radio guys, clients, and others right when they're at time of completion or within 60 days. And by doing that, you don't have a long escrow. There's zero chance of a material price increase or any issues like that. And you're stepping in right away. Because a lot of people say, I'm ready to go. I like that interest rate. And then they get a little sad and their shoulders droop. You say, okay, we'll get you one in 12 months.
Right.
We're able to do on this continual build process now. Hey, we have a few dozen properties right now that are done, you can buy on, or they're going to be done within the next 60 days. And then we go through and help pick. So that's been a major part of our positioning, because we've learned people don't want to wait. They don't want exposure to problems like we just saw. And we've done everything we can to take those off the table. And I think we've been able to do that very successfully.
Well, I love that you're peeling back the business model a little bit, because this is something that is transparent to your investors. But just for folks to understand this, that there was a time when prices were going up like crazy and you had properties that people had contracted to build, and you have a clause like most builders that says, hey, if the prices escalate above a certain amount, we reserve the right to raise the price. And you actually had to pull that trigger. And some folks said, yeah, I'm good with that. And some folks said, well, not. But that's the reason you have those protections. But when you're in a situation where it goes the other way, rarely do most builders roll that back. It's just like a tax. We have a temporary tax for 2 years and then it never goes away. No such thing as a temporary tax. But in this case, it back to the original model is the volume and not the percentage of margin. Now you've got yourself in a place where, hey, if you can pass along those savings to investors, they will buy more. And this is a big part to think about when you're selecting, a partner in new home construction, because the guy that builds 5 houses a year is just in a little different position on every level than the guy that builds 500 or 1,000 houses a year. And not saying it's necessarily better or worse, you just have to know what it is. And if what I'm after is that ROI, then making sure that I buy at the right price and finance at the right rate are super critical.
Yeah, very critical. And like you said, you don't want to always recreate the wheel. And I'm always mentoring and coaching smaller builders. Chris is doing the same. But again, our job is to take headaches out of the lives of our clients. And most of our clients are looking to have a secondary income of 3 to 10 properties that they can lean on. And by being able to come to us and choose a multiple of markets, stay with the same management process and not recreate the wheel with each property, it's able to do just that. And that's something Chris and I had to work our way up to. But we're able to deliver that in a way that, again, takes headaches away. It buys back your time instead of creates that second job.
Well, let's talk about the property management piece. First time I met Chris was in the property management office, and he walked me around and introduced me to an amazing team of people who were happy and smiling and loving their job. It was a great environment, but it is one of the biggest, most important pieces of the real estate investing puzzle is good management. A good manager is worth their weight in gold, and you guys actually provide both. Not every home builder that builds for investors primarily has a property management solution of their own. They usually point to somebody or say, hey, here's a couple of companies. But in your case, part of your DNA, part of your culture is having been in the property management business for a long, long time. Can you speak to that?
Yeah, I can speak to that with a really good story, actually, Robert. So Chris and I have known each other for a very long time. And many years ago, when I left California, 1031 exchange out of a lot of California properties into Florida, well, I was managing 100 plus of my own properties.
Wow.
And I hated it. And I hired and I fired 4 property managers. And that was not a fun process. So an investor that I had been working with on certain deals, him and his father approached me about taking over my portfolio. That would be Chris and his dad. They had the management company already going. That's how Chris and I really became friends and started doing joint ventures together, because they took over the management of all my properties and did a better job than I did. And Robert, I don't like managing my own properties. So we were in the management game before we were in the construction game. And I was actually a proof of concept of that, which is one of the reasons we worked together and now became partners. And management, as one of our mentors has always said to us, you can buy a property at 50 cents on the dollar, but if you don't have management in place, you could still lose money. And so that is always going on in the back of mine and Chris's forefront when we're discussing this. And management is one of the most important things we do. First of all, we will not build in an area until we have management set up first. You can't put the cart before the horse. So all the markets that we build in, we've already set up a division of our management company there to be able to handle that. And that's a very important thing that we've been able to see real structure and performance with our management company, which continues to grow, as you guys know. And it's one of the things we put the most focus in, because I know that is the long-term relationship with investors. Chris knows it as well, that we need to do. Another important thing, Robert, that I think people don't understand yet with build to rent, you can get a property built and you get a warranty. But if you can't find your builder in 2 years when you really need to have something done, that can be tricky. The fact that one arm of ours is a builder and the other arm is management, they work in unison. So there's no searching around if something happened a year down the road with warranty. Your portfolio manager already has it. Also, with these two arms always speaking to each other, we've gotten really clear over the last 9 years what works, what doesn't. How does this floor plan have to lay out? You will never see us put carpet in one of our properties, Robert. We made that mistake 9 years ago. I don't like carpet bills, neither do our investors.
Right.
So with both arms speaking to each other, we've been able to have better communication and then overall better effectiveness, which a lot of people don't have. There's a good manager, there's a good builder, but they don't really work in unison.
Love that. You know, real estate investors talk about friction, and they're normally talking about sales costs and transfer fees and those things. But another huge area of friction is between the builder and the property manager, just turning over the property, and all of a sudden the tenant does something to a wall and you've got to paint it. What color was that? And all those things go away completely when you have kind of a turnkey program. Now, you know, folks are not obligated to use the management, but they'd be crazy not to, just given the fact that that's kind of the door that Chris and Carter found themselves into the building business, was through property management first. And I think it shows, right? We'll talk about specifically the markets you're in, but we've mentioned Florida, and Florida is on that landlord-friendly side. Give us the up-to-date on property management and rents and occupancy, and how is that part looking in Florida?
Yeah, right now, occupancy is looking at a normal level. You know, in pandemic times, it went down to things that no one knew was sustainable about inventory levels and that. But right now, we're taking the average amount to stabilize a property, 30 to 60 days, depending on the market. We can do better than that, but we don't like to promise that, Robert. We are, as you know, pretty conservative in our promises for stabilization and long-term approach. And so we're seeing a pretty stabilized market. Inventory levels, you know, we're still at about the inventory levels, or about 20% below inventory levels that they were in 2019. And anywhere you look, Robert, everyone said 2019 was a pretty normalized real estate market.
Yeah.
And the fact we're still about 20% below those levels, we feel really good about that.
You know, it's funny. People say, well, I want to be in the market that is, 98, 99% occupied. I'm not sure that's true, right? That's a difficult market on every level. As soon as you have that kind of customary breathing room in a market, you don't want to be at 60% occupancy. But when you have that kind of normal, people move every couple of years kind of rhythm, it lets you do things like check out the house and see what needs to be done, handle a little deferred maintenance. Not as big of a deal in a new property, but over time, if you're going to be in a property for 10 years or longer, well, you're going to want to think about these times that we have to just up the quality of the property. And oftentimes that means getting either better rent or a better tenant.
Yeah.
And I know that one of the big things that you have to think about in buy and hold real estate is how long between tenants and the cost when you have to switch tenants, right? So those are our two biggest costs. And I think everything you can do on the property management side to ensure people have a great experience and stay longer benefits everybody.
Absolutely. And one thing we've learned, Robert, from, Chris and I have been we're lucky, we've sat down and reviewed a few thousand fixer-uppers we did, and then the last few thousand new construction. The tenants seem to stay twice as long. The average turn costs are less than half on average. And these are really important numbers for that initial momentum into a property, as you know. And that's one of the reasons we really like the new construction. And new construction, honestly, for management, a little secret about property management, problem properties don't make you more money as a property manager. They actually cost you money. And so Chris and I have actually weeded through our portfolio, and we've actually asked landlords to say, hey, you might want to move your property there, because if they're in areas we don't really like, they're not keeping up with the maintenance. We don't want that. We want to focus on our new construction model and have all of our forces really aimed towards that. So again, a lot of people look at this and say, oh, problems help the property manager. We like no problem properties. That's why we're into construction, or very little ones. And not something we didn't bring up. I know I talked to Russ about the other day. Because we're trying to keep things in momentum, we are also in all of our incentivized programs right now offering at least the first year of property management for free. So that really puts us to the accountability. We're saying, well, the first year is going to be free with us. And then if you decide that we're not doing our job, then you can leave. But I'm proud to say we have at least a 95+% retention rate after that first year, with many of your clients as well. But we like to give that first year for free, because what does that do? It adds to the bottom line cash flow for the right start.
Well, and talk about putting your money where your mouth is. And having spent time with the various property managers there, it doesn't surprise me at all that the retention rate is that high. And I think there's one other nuance, and that is back to the economic model. People say, really? They have a lesser profit margin? Well, yeah, when you sell a house, you make a few points less in order to use that money to get the loan in a better state for the investor. But let's face it, property management is a profit center long term. So if you know you can deliver that and you can have that piece long term, well, doesn't that all make sense? Our guest is Jim Shields from Southern Impression Homes. We'll talk about some of the specific markets where they build property, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advanced notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hi, this is Sam Freshman, author of Principles of Real Estate Syndication, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. It's the most wonderful time of the year, not just because of the holidays, but because we're about to start 2024. If you want to make sure next year is your best year yet, then come to the highest rated event we ever do. It's called Create Your Future. The 2024 Goals Retreat takes place the second weekend of the new year in Dallas, Texas. Lots of folks have transformed their lives after attending this event. Are you next? Check out the details at goalsretreat.com. That's goalsretreat.com. We're talking with Jim Shields today, who has found a way to offer below-market financing in some above-average markets. Before we get back to that interview, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. When you hear the question and think you might know the answer, send your best guess to trivia@realestateguysradio.com, trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. If you're the first to get it right, you're going to get an awesome copy of the 20th anniversary edition of Rich Dad, Poor Dad. When the book turned 20, Robert went through and enhanced a whole bunch of it. You're going to dig it. If you've read the original book and not this one, you need to get a copy. If you've already got one, it makes a great gift. Last week on the Real Estate Guys, we were talking about alternative lending options in a high-interest environment, and we asked this: name the U.S. state with the lowest cost of living as of last year. Well, the answer is North Dakota, followed by North Carolina and Wisconsin. Stacker used data from the Council for Community and Economics Research to determine which states had the lowest cost of living in 2022, and North Dakota was the winner. Here's our real estate trivia question for this week. With holiday travel season upon us, here's what we want to know. Which U.S. airport had the most delays and cancellations during the 2022 holiday season? With lots of people traveling, unfortunately, it does happen and the weather exacerbates it. But for last year, which is the airport in the U.S. with the most delays and cancellations? If you think you want to know, or maybe you fly in and out of there, send your best guess to trivia@realestateguysradio.com, trivia@realestateguysradio.com. Send us your name, your physical mailing address, and the answer to the question. First person that gets it right. It's the 20th anniversary edition of Rich Dad Poor Dad by Robert Kiyosaki. That's today's real estate trivia question. We're talking with Jim Shields of Southern Impression Homes, and you've heard Chris Funk on the program several times over the years. We've done investor field trips to beautiful Jacksonville, Florida. And Jim, you guys are in a multitude of markets. I mean, you're headquartered there in Jacksonville, which has been a strong market in a lot of ways. But let's talk about some of the areas that you guys build in, because one of the strategies investors have is to diversify a little bit via market.
Yes. Yeah. And so we try to offer an array of markets. But I think one of the most important things we do, Robert, is the research. So we're not in Miami. We're not in Tampa. We're not in Orlando. And some of our West Coast friends where I came from say, well, isn't that all of Florida? And the answer is no, absolutely not. And we are always looking for those second tier markets that are experiencing really good population growth, economic growth. The affordability index is still really healthy, which is important to Chris and I. Desirable, what's drawing them there? And there's a healthy supply and demand. There's more people than houses. And there's a lot of secondary markets, you guys have joined us in that are important. Our Jacksonville hub market in Palm Coast, Ocala, Citrus Springs, Inverness, more that Central Florida, and then about 7 markets in Southwest Florida in the greater Fort Myers area. This is where we've decided to focus our efforts right now in Florida because of those fundamentals. We feel like we can build right, we can get them at the right pricing, cash flowing right off the bat, and they're poised for growth, but they also have more of a comfortable buy-in level where you're not buying where it seems, gosh, this seems really overpriced. In fact, we never hear that from especially our California, New York buyers that are coming down. But there's cash flow right off the bat, and that's really important to us and not easy to do with new construction.
Well, the other thing about it is it lets you guys kind of capitalize on your strengths. It's not that easy to go into a brand new market and build. So when you start locally and then you go maybe an hour south and then you go maybe another hour south, and little by little, you're building up the teams, you're building up the supply chain. It gives you better pricing because you buy in bulk. The houses are all great, but they look very similar because you use the same materials and the same standards, all the things that make it better and easier to manage. Absolutely. As opposed to building a house that is so unique that every owner feels like they have their own castle. Rental houses aren't necessarily like that. And especially when you get into the multiple unit properties, duplexes, quads or fourplexes, right now you've got a product that's absolutely designed for both a tenant and for an investor. And that certainly works. So love the fact that you're not just in one market, but multiple markets. Now let's talk about your new book. I know you and Chris have been working on this book, the Passive Income Playbook. Tell us about that.
Yeah, it's been a wild ride the last 25 years, Robert. And, the first model that I went into, I was really excited and worked hard and almost bankrupted me. And then the second one, I made a lot of money or good money, and it started to bankrupt my time. And then kind of 3 was a charm with bringing together almost a decade ago this build-to-rent model. Because not only was it able to buy back my time and give me more time with my family, it's been able to do the same for nearly 1,000 clients. And build-to-rent was really that crossover. that took me from that second or third job in real estate, which, man, why did I go into this again, to taking off a lot of the restrictions, to taking off a lot of the headaches. And that's kind of what this book is about. Our principles of investing that Chris and I and my wife have put together over the many years. And how does that outlay and how has that been formulated into our entire build to rent venture? We share some deep stories of some of the good, the bad, the lessons, but ultimately, what was the birth of this build to rent niche? I mean, you guys know 10 years ago, this saying didn't even exist. Now there's billions of dollars searching it, and we feel lucky to be on the forefront, but we try to tell that inception story and how it started so small. And again, even though it started small, it's continued to grow with smaller investors. In fact, we work with some of the hedge funds and the family offices, which is nice, but we really enjoy our individual investors. Those small stories, just like mine and my wife's, of families enjoying time and having that secondary income to lean on, to have this wealth that they started to plant just 5 short years ago, and now they see the results. And that's what the book's about.
Well, I love that you've taken the time to get some of those lessons out on paper and share some of those stories. It's relatable that way. Our motto at the Real Estate Guys is education for effective action. But our favorite thing to do is collapse timeframes. And when you guys can take, a quarter of a century worth of experience and distill it down into a few hundred pages, that's awesome. The book comes out next year, but right now you can get the first 3 chapters for free. So if you're interested in learning about what this book has to offer, there's some good stuff in the first 3 chapters. All you have to do is send an email to playbook@realestateguysradio.com. Playbook@realestateguysradio.com will get you out the first 3 chapters of the Passive Income Playbook that Jim and Chris have put together. Hey, in our last little time together here, Jim, one of the things I've always appreciated about the product and the service you guys offer, having seen so many of the properties personally, having been in your office several times, is that a seasoned investor could absolutely have a wonderful smorgasbord of properties to pick from. But I think really someone who's not invested before, they're brand new to owning anything other than the house they live on. You guys really have a program that makes sense, not just from the fact that it's easy to delegate the work and have a manager from afar, but that you kind of hold people's hands and take them through the process. And you spoke a little bit about your heart for the small investor, but let's talk to that brand new, never invested person before. I know you have a lot of people like that. What would you say to those folks?
Yeah, I'd tell them that 24 years ago, I was standing in the rental property I was renting in California, and my agent called and said, "Your offer has been accepted. $152,500 on this triplex."
Wow.
And Robert, I hyperventilated in my kitchen. I was so nervous. I said, "I can't believe that I just made $24,000 last year. How is this happening?" I don't think Chris and I have ever forgotten that, because Chris has a similar story when he was working in the dry cleaners and his first deal got accepted. We have tried to train up our sales consultants to be semi-real estate doctors. Let's listen to what your goals are. Let's listen to what you're comfortable with. If someone says to me, "Robert, yeah, I've seen all the reports, I've watched your videos on hurricanes, they still scare me. I'm a California, I'm used to earthquakes. I'm going to say, great. Our sales consultants know, let's start in the Ocala market, where it's the lowest hurricane risk zone there is. Or they might say, "Hey, I'm not looking for cash flow as much right now. I really want growth." Well, then our sales consultants are going to point them probably to one of our closer coastal markets in Southwest Florida or Palm Coast. They've been able to, since they've worked with dozens and dozens and dozens, to ask the questions. Almost all of our sales consultants, again, are investors themselves. They know that feeling. So they like to, ask about the symptoms and then diagnose. That's what I think we're kind of best at. And that's why I always say the biggest compliment is when a person buys one, within 2 to 3 years, they buy a second or a third or a fourth. And that's where I think the handholding has to start, with just that one. When people go, "Gosh, what was the biggest real estate lesson you ever learned?" I said, "Easy. I just told you in that property that got accepted, 432 North M Street in Lompoc, California." I think that I wish I had one of our sales consultants with me on that, because they take away a little bit of the emotional stress. They walk through the main numbers, and then you're always a part of the process, but never on your own, Robert. And that's one of the things I think most important with our team venture is they will be a part of the process, seeing the photos, looking at the inspections, the appraisals, the lenders, the property transition, but there's someone always at your side walking you through each step. And sometimes the number sheets can be a little confusing. We like to make them simplified so you understand the main levers that we're pulling and we're focusing on that so many other investors before them have, which gives them a little bit of calmness, a little bit of better clarity. And that, the property is important, but we want to make sure they're in the right mindset, they're in the right knowing moving forward, because we all know if they move forward with a little more confidence, a little more assurance, a little more clarity, they're going to feel better. And that's the major goal of our sales consultant team.
Jim's new book, The Passive Income Playbook, is going to be out shortly. You can get the first 3 chapters, plus you'll get contact information for Southern Impression Homes and Suncoast Property Management if you just send an email to playbook@realestateguysradio.com. That's playbook@realestateguysradio.com. Great catching up, Jim. Thanks for being on the program.
Good to see you guys again. Thanks for having me.
You're tuned to the Real Estate Guys radio program. More when we come back. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom-and-pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate-controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at selfstorage@realestateguysradio.com.
Hey, I'm Jim Grant. I am the editor and indeed the founder of Grant's Interest Rate Observer. And you, ladies and gentlemen, you lucky people, are listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you've ever wanted to do bigger deals using other people's money, or you want to invest alongside the Titans, coming out to the secrets of successful syndication or 2-day workshop on putting together bigger deals and investing in those deals. It happens in March in Dallas, Texas. And in fact, all the details on the website at realestateguysradio.com under events. Turns out Jim Shields is going to be there. So great to hear from Jim. We've had a chance to run into him over the years, but very excited about the fact that, one, they have inventory, and two, they have these great programs for interest rates.
Yeah, well, it's been a little bit frustrating. We have been talking for a long time about how real estate, income-producing real estate, is really a great foundation of a real asset portfolio. It takes advantage of everything that is going on in the macro and really what is wrong with the system. Inflation baked in the cake. You really want to go into debt long term. You need to own real assets that go up as a result of that persistent inflation. At the same time, you need to concentrate on things that are real and essential, and it doesn't get any more real and essential than housing, especially affordable housing. We talk about great markets, and so that part's exciting. The frustrating part has been nobody's had any inventory. you hear all the time in the news how the National Association of Realtors is complaining, even on the owner-occupied side, there's just no inventory. There's no inventory. There's no inventory. Meanwhile, you got a state like Florida that's just filling up with people. You get the baby boomer generation from the Northeast that's been retiring there since forever. Then you've got the great job creation engine that's there that has been pulling people in. No income tax, only one of 7 states that are that way. And as people are getting squeezed, they're looking for where can I go to have a better quality of life. And we've been going in and out of Florida for a long, long time looking at the different markets. And of course, we've been going to do field trips up in Jacksonville, working with Southern Impression Homes, and really gotten to know that market. But the challenge has just been inventory. When you get somebody that understands the avatar, if you will, that what it's like to be a residential income property investor, and you can design a product, and not just a product, but a financing structure and a property management solution in the right market that delivers at the right price point, the right financing and cash flow, and then provide that property management solution. These guys have actually designed an entire offering that really is rooted in their firsthand experience of what it is like to be a brand new investor or to be a small property investor. And so it's a lot of fun now to see that with this new relationship they have that has been able to underwrite them, that they're now able to come up 5,000 lots. That's a lot of inventory. So it's fun to be able to open up the floodgates and let our listening audience know that these folks are available now. It's great.
No, it's really great to see that they've got all the angles covered. You know, I mean, we've bought properties in the past and then had to go find a property manager, and that's just part of the way it works sometimes, but we always prefer the other way around, right? You go talk to the property manager and say, Mr. Manager, what can we put in your portfolio that's going to make you and us happy? It's just a shortcut, and obviously these guys wouldn't be building anywhere that they weren't willing to manage the properties. So you're certainly not in an obligation to use their property management, but having spent time with their folks, I don't know why you wouldn't, and especially with the first year for free. Sounds like we're selling them. We're not doing that. We just wanted to bring you kind of a rubber meets the road reality check on last week's topic when we talked about, hey, there are folks that are out there that will buy down the loan for you. And in this case, it doesn't change the price of the property. And it's just another way. I'm not saying that's the only answer. Obviously, everything else we talked about is important. I think a great start would be to read the first 3 chapters of Jim and Chris's new book, The Passive Income Playbook. Just send an email to playbook@realestateguysradio.com. And then coming out to the secrets of successful syndication, Jim's going to be there talking to syndicators who want to find inventory. Same exact issue, just at a bigger scale. It's the holiday season, and there's still time to do your holiday shopping with the Real Estate Guys. Our upcoming Goals Retreat, Create Your Future, the second weekend of January, would be an excellent holiday gift, as would be the 22nd Annual Investor Summit at Sea. We just completed our ship inspection and got to see this amazing new ship we're going to be on. It's got fabulous pools, awesome nightlife, excellent restaurants, killer bars, an unbelievable art gallery installation, plus 24-hour room service. If that's not enough reason to gift the summit to someone, maybe spending time with our incredible faculty like George Gammon, Brian London, Peter Schiff, Kenny McElroy, Tommy Hopkins, and the Real Estate Guys would be a reason. Everything that you love about a cruise and a whole bunch more. You can find out all the details to do your holiday shopping at realestateguysradio.com. Got a great show for you next week. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.